Alright, guys, Quantum League Capital here, and we're back with another motherfucking video. And today I'm here with my boy Corey, another one of my trader friends, and he's had success in the market, had funded accounts, had withdrawals, and today we're here to give his perspective. And Corey, would you like to introduce yourself and give us a little bit about your background?
Yeah, of course. Hi, everybody. I'm Corey, otherwise known as like Failing Forward Forex. You guys can always check me out on YouTube there. Um, Basically, this man Hunter, he's the one who put a lot of the people in our little area onto trading. So you guys are getting taught from the best of the best. But
Appreciate that.
essentially, he taught me the basics and stuff, and we kind of both learned from similar mentors. And then eventually, he put me onto funded accounts. And from there, we both got funded. We both taken out withdrawals, and we both kind of developed our own sense of trading, which is a little bit different, even though we learned a lot from the same places.
Yeah, and I think that's a great way to put it. Me and Corey have known each other since like middle school. So we've known each other a very, very long time. And I think we started trading, what, like 5 or 6 years ago?
Yeah, somewhere around like the end of 2016 is when well, personally, that's when I started taking it a little bit more seriously. I was still working like full time,
Right.
and I even like became a manager and like was still trading and trying to take it as seriously as you can. And then I think last year was the time where I was able to like fully commit and quit my job and become just like a full-time trader.
Right. And yeah, it's been a long, long journey. Like you said, we've had like some mentors that we both were following, and then they kind of like fizzled out and were doing their own thing. Um, it's been a long journey and a long process, and I guess we'll get right into the interview now. The first question that I have for you is, what is your perspective on the markets in general? And also, what is your strategy that you prefer? Do you like more of a scalping strategy, a day trading, swing trading, these type of things? What do you look for in your entries? Can you give us a little bit of information about your strategy?
Yeah, of course. I kind of go into a little bit more detail on my page over some of this stuff. I give a bunch of live footage of me trading. If you want like criteria for entry, you can always check that out. But for right now, I do have like just a blank chart opened up right here, and my personal preference for trading is intraday.
Okay.
Now, I tried swing trading. I found that it just wasn't for me. I like to be in and out of markets just because I noticed when I swing traded, I was just like holding trades for too long and then they would reverse on me and then I was ending up losing money, which is never really where you want to be. So I switched to just being kind of like in and out. So kind of a little bit tighter of stops and then just quicker take profits. Sometimes I don't even let it hit my take profit. I'll just stop it at like a 1-to-1 or like a 1-to-2.
Mm-hmm.
And as for like criteria for entry and stuff, I mainly like try to follow the trend like almost all the time. There's a
Right.
couple times where I don't follow the trend, and that's when my fundamental bias is just completely 180'd from where the markets are actually going. And for instance, the US 30.
Mm-hmm.
So my fundamental bias on the US 30 is short, just because I know the Fed are raising interest rates.
Right.
I know that the stock market has had an insane recent like 2 years since 2020, since that big crash we had. It's
Mm-hmm.
just rallied like ridiculously high
Yeah.
and made all-time highs like it seems like every month in 2021.
Mm-hmm.
So here in 2022, we've seen a slight downturn, but even then, like these past couple of months have just been insanely bullish. So I'm still waiting for just like a better entry to go short on
Mhm.
so that I can kind of hold it a little bit longer, more like a swing trade, just so I can see the maximum amount of profits for something. So ideally, I would like to get in, somewhere near the highs of 2021 or maybe the beginning of 2022 and just try to like make a stop right above it or something, or maybe a little bit more than right above it, just because the stop hunts will always try to get you. But there's lots of different ways, to enter in to go short, and then yeah, just for entry criteria, I always try to have at least like 2 to 4 confluences,
Mhm.
ranging from like daily analysis. Where do I think it's going on the daily? Do I think it's bullish or bearish? On the 4 hour, is there like a specific candle pattern that I see? Or on the 1 hour, like where's the momentum going? And then I'll usually break it down all the way to the 5 minute. And the
Right.
5 minute will show you some like really tight entries where you can get in as long as you understand price action and what's actually happening in the market.
Right. And so I like what you were saying about US 30 specifically too, how you were saying that you basically almost form like a trade hypothesis. You know what I mean? Like you have an idea like from a technical standpoint what happened in like the past years and months, and you also have like a certain fundamental bias. And that's another question I want to ask you is for people that are just starting out, would you recommend them to pay attention to the fundamentals, or should they get the technicals down first? Like, what would you recommend to people that are just starting out?
What I would recommend is just focus on your technicals, focus on your candlestick patterns, the inverse hammers, the railroads, whatever you want to call them,
Mm-hmm.
really, and understand the meaning of how they happen and why they happen. Uh, so, for instance, like this candle right here, I don't know if you guys are able to see my screen very well. Can you see my mouse at all?
Yeah, I can see it.
Perfect. For this candle right here, this doji, what I would say is like, yeah, it's a doji. But what does that mean to be a doji? It means that like buyers had a big push up,
Mm-hmm.
essentially, because this is the weekly candle. So buyers had a big push up, and then the sellers were able to push that back down to essentially break even,
Mm-hmm.
which symbolizes to me that there's like not enough buying power and or there's a lot of indecision in where the market wants to go.
Right.
Essentially the same thing here for these dojis, these back-to-back dojis. There was a huge bullish momentum. There's a lot of pressure going up. And then the very next couple weeks, they're like, well, I don't know where to go. You know, it kind of signals to me that the bullish, that buying power that's in the market is kind of going down,
Mm-hmm.
especially when you have them back to back. It kind of just shows that the market's not even sure where it really wants to go at the moment. So you always just want to kind of wait for your confirmations and wait just to make sure that you're able to get in as best you can with the most understanding in your position and why you took that position.
And also, I mean, look at like where those dojis are at. They're also at like key levels too. So this is kind of what
Mm-hmm.
he was talking about with like multiple confluences and having like a criteria before you enter a trade. Now, another thing I want to talk about is this is something that we learned about like very, very early on, but I'm not sure if, especially for people who are new, have an understanding of this, but market manipulation. Um, what do you have to say about market manipulation and how it impacts the market and how it impacts your trading specifically?
So, first off, let's just start off with the markets are manipulated. It's a proven fact.
Right.
Bunch of big banks have been caught and fined billions, if not trillions of dollars for manipulating the markets. And that includes big banks like Chase and Bank of America and central banks. They have all been essentially caught at some point or another and you can look up online, you know, market manipulation and forex, and you will get a trillion different hits on mainly big institution hedge funds or banks manipulating the price of a commodity such as like say gold, or such as say like even the US 30 has been manipulated in the past. So it's definitely prevalent in the markets. How it impacts my trading is you have to be aware of what their goal is and what they're trying to do in the markets. Because you never really want to be against where the big banks or the people who are able to move the market, you never want to be in the opposite direction of what they want. And it's
Right.
sometimes a little hard to know what they want, but they oftentimes print the same patterns over and over again in order to achieve the same goal, which is just making a lot of money.
Mhm.
And that's kind of something that both you and I had learned about pretty early on, is that they print the same patterns and you're able to, as well as like it comes with experience, it comes with time in the markets, and it comes with really controlling your emotions, but you'll be able to spot the same moves over and over and profit off of them. For instance, Um, this wick right here, after all these dojis, that's definitely, it looks like an institutional candle to me, or an
Right.
institutional wick.
For
And
sure.
what one of the things that signals to me is there's a huge amount of buying pressure just going up to break the previous high from weeks ago, and it just barely breaks it. So anybody who was shorting anywhere in this area, right? Or any even buying even, you know, they've got stopped out and then it came up and they stopped out all the sellers, which just accumulates more contracts for them because whenever you place a contract, there's someone on the other side of that contract. And there's only a certain number of contracts at each price point. So all these people who put stop losses up here, they went up there, they took all those stop losses, took all those contracts, put it on the other end, and they just made all this money pushing the price down.
Mhm.
And once it's kind of like a snowball effect. Once you kind of push really hard in one direction, once you get the ball rolling in one direction, it's really hard to stop it. So their moves are pretty brief, but they have a huge impact on the following momentum in the price, essentially.
Yeah, it's a huge momentum. And another thing that I would add to that is that the reason that these moves end up happening is because these institutions really have so much money that they're working with that they can't just usually enter the market like that. They usually, what they have to do is break up their positions and push it to a certain place where they know there's orders, and the orders will start to fall in line with what they're doing. So they're pushing these orders to get it to a certain place, take out people's orders, but also once those orders, get stopped or whatever, they turn into the opposite. So say you're selling and it hits your stop loss, it turns into a buy. So like every time they're hitting people's stops on the way up, it's just pushing it higher, and then they have orders that are sitting there to sell once it gets to the place they want it, and then it just tanks. And it's a dirty, dirty game. That's just the fundamentals and like the core behind the business. You have to understand that, because if you don't, then you're gonna get fucked.
Yeah, essentially, you have to keep in mind when you're trading that everything that you trade, whether that's stocks, whether that's commodities, whether that's, metals, whether that's oil, whatever it is, right? Euro USD, like forex, that market is designed to take money out of your pocket and put it into their pocket.
Yeah,
Their pockets being the big banks, any hedge funds, big institutionals, big institutions that are worldwide, essentially.
100%.
So you're already at a disadvantage.
Now, another question I want to ask you is what is your opinion on funded accounts versus personal accounts? Which do you prefer and what would you recommend to someone who isn't just starting out but has their foundation, has the fundamentals and their strategy? What would you recommend to them starting out with? A funded account or a personal account?
So I think there's levels. Um, I think if you're anywhere from beginner to intermediate, you want to refine your strategy even more to
Mhm.
just do demo accounts and to really hit consistency before you even attempt to move to live or funded. And one of the main reasons I say that is because you can spend so much money just trying these challenges if you're at a beginner to an intermediate level and never passing, or you can spend so much money in the live market
Right.
and you will just be missing something and you won't know what it is until you finally like go back test strategies, look at all the data, make sure you're journaling. Journaling is such a big part of trading just because it'll teach you what your mindset was, what the market was, what position you took, why did you take that position, and going back and seeing what your winners are. Why did I take this winning trade? Well, you didn't know it was going to be winning when you took it, but you know, essentially, what were the confluences you had when you took that winning trade? Okay, is that replicatable? Can I replicate that in a live market? And once you feel like you're hitting around a 40 to 50% consistency with anywhere from a 1 to 3 RR, I would say go for it. Go ahead and start taking funded challenges over starting in a live account. The main reason why is because what happens on live accounts is you'll say have, let's just say $1,000, right? You have $1,000, you put it into a live account. Now, the risk that you're using on that live account to see any real money, because if you don't risk like 10% ish, you're not even making like $100.
Right.
And what's $100, right? Nowadays with all the inflation and everything, like your groceries for a week.
Mhm.
So you're not seeing these massive, massive gains that a lot of these online YouTubers will try to show you. They'll be like, I flipped $1,000 into $20,000.
Yeah. Something
It's
that's
it's
unrealistic.
super unrealistic to maintain a level of risk that's just that high. It's insanely risky for not only your account but your mental. There's only so much like money, especially if it's live money, that you can lose before you start going, "Oh shit, that's a lot of money." You know, I still remember like the first time I lost $500, like real on a live account, and I was distraught for like a week because I was a server. That was like, a week of my paycheck. That was a whole week's time. And I lost it in like a matter of an hour. And I was like, holy shit. And it's not like I needed the money. It was just the fact that that was a week of my life gone in 1 hour, you know? Whereas if you pay for these challenges, they teach you how to fund or how to maintain proper risk, even up to an insane capital or an insane amount of capital for most people. So the even $50,000, your risk on these accounts can't be more than a 5% drawdown. That's $2,500 in a day. That's what most people will make in a month, essentially.
Right.
And you can't lose that in 1 day. And, once you start thinking about it in terms of like, that's X amount of my time,
Mhm.
whatever job you're working, even if you have a really good job. I have a friend who is graduated with an engineering degree and he started trading recently and he was like, "Oh man, I made like, $300 today." And I was like, "Oh, nice." Like that's really good." And he was like, "Yeah, that's like a whole day for me." And I was like, "Yeah, it saved you 24 hours right there." And he was like, "Holy shit. It saved me 24 hours." He didn't realize that he was actually like that paid for his time, you know?
Hmm.
And so like that mentality is really tough to get, and especially like when you're risking so much on live accounts, like on small capital live accounts, you'd have to risk so much more of your capital, and it's just not sustainable at high level capitals. So I would prefer to go with the funded accounts
Right.
until you hit a certain amount of money that can equal a funded account in a personal account.
Yeah, I agree with that. I think the goal eventually is to get yourself to a personal account with a big amount of capital. The funded accounts are there for, honestly, you should trade them for as long as you can, because a lot of them can scale too with these companies. So you can keep scaling it and just keep getting more money, and more money is just more money, right? But eventually it's good to get it into your own personal account because one, you fully control it, and two, there's not as tight restrictions. Obviously, you still want to hold yourself to a certain standard, but yeah, it's fully under your control, and there's nothing better than that. Um,
Absolutely.
and yeah, I think that funded accounts aren't for everybody. I will say, because some people are out there and they do trade with more risk and they do just fine. But I think one thing with the funded accounts that taught me personally was it taught me a lot of discipline because we talked about this with Chris and Franz, but whenever we were talking about it with Chris, he brought up a good point like you. He said that these challenges, they get expensive after a while. If you keep losing them, it will cost you a lot of money, especially if you're buying the higher end accounts which give you like 200k, some places 300k. Like these 200 300k accounts, they start to add up really fucking quickly, and it will teach you that discipline because all that shit that happens when you lose that money and you don't get those accounts, it's just pain and it's suffering. So like when you don't pass these accounts and you lose that money, it's going to build up and it's going to drill it into your brain. Like you're going to get it one way or another. So it's going to drill that discipline into you and be like, okay, I need risk management. Okay, I need to like change my strategy maybe, or I need to take my profits, or whatever it is that you need to do, you're going to figure it out because you don't want to keep losing money because like I said, that shit will add up really fucking quickly.
I mean, absolutely. Real quick, I'm just gonna show you what he means by this. So this is the FTMO client area, which is one of the prop firms, uh, just like where you can get funded, where you can get a lot of capital. And this has a history of every account I've ever bought. And so you can see I started out with like a $10,000 account in 2020, and I was still working as a manager, like full time. And I didn't pass it, and I was like, "Oh man, that fucking blows, that sucks." So I took another one, like just a couple months later, and this time it was for $50,000, and I didn't pass this one either. So that's more money added in this funnel, And then another one a month later, another one another month later, and thankfully these were repeats. So as long as you end the account in profit, they'll give you the challenge again. So I got a free repeat, and then another one, a repeat, and then finally I passed my first one in 2021, and that was. I thought that was it. I was like, "Whoo! I got $50,000 capital. Like, I'm doing so good. I'm gonna be profitable from here on out." And then just look at all these, just more challenges, not passed, not passed, not passed, not passed, passed, repeats, passed. It just goes on and on and on. So even when you have passed it one time, or maybe you're hitting the repeat a lot, you're just having retries over and over again, don't be discouraged because, or if you pass it, don't think you've made it.
Yeah,
Like, don't think you've gotten to the top
you're not
because
in the clear.
yeah, not even in the slightest. I'd say the toughest part comes when you are trying to pull out a real profit withdrawal. I'd say that is when it becomes super challenging. You've passed phase two with the verification phase, and you go into like starting to withdraw money, and it just becomes a whole different animal, in my opinion. And that's something I did want to bring up with these accounts is I recommend treating it like it's real money at every point in the challenge.
Mm-hmm.
Just because that mental shift that you can have from being like, oh, I only paid $1,000, or I only paid $500, or I only paid $200 for 50, to get this much capital. That's not even your capital. You don't feel like it's your money. You have significantly less money invested in than these companies do. So it doesn't feel real. When it really starts to feel real is when you pull out your first withdrawal.
Yeah.
And that's when you're like, holy shit, I just made 6 months worth of work or 3 months worth of work in 1 month.
Mm-hmm.
And you're like, whoa, that's insane.
Yeah.
And that can lead to a lot of problems. So basically, that's when the real challenge begins, in my opinion.
Yeah, and from what you're saying, it sounds like it's always a big mental game, right? And this is something that I was talking about with Chris as well. And he said, honestly, bro, and this was towards the end of the interview, and he was like, one of the best things that you can do is master yourself. And I couldn't agree with that more because I think trading is a game of self mastery. Once you finally, you know, and this goes to what Corey was saying about the trading plan, and you start to see the patterns of yourself, not only of trading and technical analysis in the market, but you have to know the patterns of yourself. And once you know these patterns of yourself, you can go in and start to change those patterns. And once you're able to do that, you can really take your trading game to the next level. So we're gonna wrap up this interview, but I want to give Corey the last words and say, what is your biggest piece of advice for someone just starting out, and uh, give them some motivational words just to keep going, because trading can be a bitch sometimes.
Yeah, absolutely. There's been many times where I was like, is this the path for me? You know, should I just go back to getting a shitty 9 to 5 or working those 60, 70 hour work weeks? I'd say the biggest thing is just don't quit.
Right.
It's okay to take steps backwards in order to make leaps forward. So even if get a funded account and then say lose the funded account, it's okay to go back to working, whatever job you were working before, whether that's at like a restaurant or you're door dashing or you're working in a factory or you're working at HEB, you're at a gas station, whatever it is, right?
Right.
Whatever you're doing, it's okay to take that step backwards just because all that experience in the market and with the funded accounts will pay off in the end. You just can't quit. You can't stop. That's my biggest piece of advice because if you stop, then all your chances, all that time will feel like it's for nothing. And you can't let that happen. It's just, there's too much potential and freedom in trading for people. Like, to be quote unquote broken out of the matrix, I guess is a popular term I'm hearing nowadays.
Right. All right.
Escape the rat race or whatever. There's too much potential for that. Even though this is one of the hardest industries to be in, I feel like everybody has a chance if they just dedicate the time and the effort that it takes to make it.
100%, bro. And yeah, that's a great fucking piece of advice. Definitely don't be afraid to go back to working a job. Um, You're going to go through some shit in trading, especially when you first start out. You're probably going to blow some accounts. You're probably going to get some bad advice. You might follow the wrong people. Um, I basically would tell you that number one, risk management, most important thing. Number two, get a trading plan ASAP and journal your trades. That's where you will find a lot of your mistakes and things that you're doing wrong. And number three, just like Corey said, don't give up. I think one of my favorite quotes is "You're 3 feet from gold." It's just like the picture of the miner who's like digging gold and then he turns around, but he was right there. So you never want to give up. You're 3 feet from gold, and just keep fucking pushing.
Can I
So
add one last thing real quick?
yeah, go for it.
I think one of the big things about being a trader is being consistent in your daily life and your daily routine outside of trading.
Right,
So, for instance, if you're waking up at sporadic times and trading at random times, and oh, you're traveling 5 days a week or whatever and trying to trade, and it's hectic and chaos, then your trading is going to reflect that. It goes back to what you were saying, be the master of yourself and
right,
know your own patterns. I think staying in a pattern of when you're profitable and what makes you profitable. So if you only take trades between, 1 or 2 in the morning, then only take trades to 1 or 2 and don't take trades outside of that. That consistency in your game plan, your trading plan, and the consistency of like just maintaining your general health, like going to the gym, reading, and interacting with your friends, stay social, just try to like overall enjoy your life.
right.
And that will also be reflected in trading because it's a lot of mental. So if you're feeling down, if you're feeling tired, if you're feeling sad, then it's going to reflect in your performance. So always try to stay on top of like the overall routine and your general health of everything.
100%. Routine is everything, guys. Routine is everything. And yeah, I think we'll wrap it up here. Thank you, Corey, for stopping by, giving us your perspective. Everybody go check out his channel. Like he said, it's Failing Forward Forex. And thank you guys for stopping by. Peace.
Doses.